the S&P 500 and possibly even NASDAQ. Let's now take a look at the options world and have a look at the wild and wonderful in terms of major moves. And you can see here that we had a $43 million option day trade, which was big. And we had 53% calls and 47% puts. And then us, the retail traders, made up 28% of the single legs. When we take a look through, you can see Mara was very negative with actually even calls and puts pretty much. And there were some big trades still going in on energy. Energy such as Exxon up 1.3% with 89,000 on the calls. So there's been quite a lot of calls coming through. Citigroup also getting 419,000 calls versus 154 on its earnings day. So some big trades there, and of course a couple of unusual things. When we look through rotation, was it really a day that was super big? Not really. It was regional banks down, things like financials down a little bit, energy up, and gold performing quite well, which was probably expected when we take a look at the price action. And then, of course, we also look at yields dropping off during that session. When we go over the last 5 days, it's still technology and semiconductors and all of those types of things up in front. And it's really been a movement of both defensives and some of the semis. But these semis have recovered very quickly. So it starts to make you think, well, is this market really showing us a true recovery, or is it more of like dead cat bounce in those particular sectors that were sold off near the back of 23? Let's now take a look at the S&P 500. We do have a supportive and accommodative World Central Bank, being the purple line. And of course, we also have one from the Federal Reserve. So the markets are being held up a little bit by that. The percentage of stocks above the 20 moving average have dropped quite significantly down to 37.56. So we're not quite at those 25 levels yet, but we will be watching this one very closely because, of course, if we get down to there, we get down to mean reversion, could be an interesting zone for swing traders and investors. And yields dropped off after making it through the 20 moving average, coming back down into this red zone we've got sitting around 3.9%. I'd like to see yields spike off this level if it's going to trigger a further sell in markets. So, of course, yields worth watching, and you can see here the weekly and how it's looked. It hasn't got back to that 4.2%, which would be mean reversion. So we're obviously looking for that potential should we make a hold here at 3.9%. Let's move over to treasuries. Big transactions going through around here in treasuries, and also a new low being formed last week. If we get through this yellow zone being 97.66, I could see pushing of pressure to the upside. So obviously some strength could come through treasuries. But for now, the trend is down and markets are continuing to basically sell off treasuries because they had such an amazing return. I mean, to see a return like this in treasuries without a pullback, pretty unusual. And at this point, it's just doing mean reversion, which is moving back down towards that 20 moving average and that 93 structural zone, 93, 94. When we look at bonds and we take a look at the risk levels there, not too much movement. So bonds basically showing that they're not totally fearful of the markets right now. Transportation's certainly still weakening off. Big transaction volume coming through on transportations. And at the moment, that double top is playing out. So you can see here, weakness in transportations, an early sign often that things are not looking too good in the market, at least in the short term. Then we go over to home builders, something similar. Bit of a return here where markets kind of started to look a bit weak. And if we go and have a look at semiconductors as well, you'll notice that this is the one we're talking about. The big transactions went through here, and we have kind of like a little bit of a change. So Nvidia might be doing really well, but the rest of the semis not so good. And if it does manage to get through those kind of low lines here, and we'll get a bit of a price here, about 548 on SOX, you could really see semiconductors start to weaken and even move down into that previous flag level, which of course sat around 520. So there could be a little bit of selling here coming up for semis if markets are unable to hold what is currently being 2 rejection wicks. And of course, for bulls, what you're looking for is just to break out of this high, fill the gap, move to a new all-time high. Big transactions coming through. Are they sells or buys? We'll probably find out in the next couple of trade days. So let's now take a look at the volatility of the VIX. And obviously we have a pretty big spike up here. A lot of this is due to this week's options expiration, but also because earnings season is kicking off. Now, it's an interesting factor because we don't always see it lead, but sometimes it can. Let's actually load up here the VIX over the top. And what you'll notice is that we sometimes see a bit of a spike. We'll change this to a line chart. And we sometimes see a bit of a spike of VIX, VVIX, before the VIX spikes itself. Volatility spikes here. The VIX actually spikes afterwards. So this is something that we're looking at. And of course, we're very closely paying attention to. It's the VVIX, and volatility certainly looking like it could be on the horizon based on this chart alone. Let's move over to the US dollar, still holding through this zone. Still no closure above 102.40, which we're looking for on the daily. If the closure does happen, we could see the markets move to 103 to 104 on the US dollar. And at this stage, the market is being kind of held down by this daily 20. You can see here it just keeps sitting around that level and the downward trend line. Now, if the US dollar is able to get up, oftentimes that's been synergized with markets going down. If the US dollar is closing below these lows, it's probably going towards a new low, probably underneath parity itself, which is 100. And markets will most likely be through that big 4,800 zone and pushing towards the 4,950. So remember, there are two scenarios here, but we can see how important these areas are. Gold did rally back into our supply, sold off that area. I could see it kind of selling down to the most traded zone, potentially some buyers finding themselves in this area. Day traders may want to be looking at those levels and seeing whether there's anything interesting. But at this stage, gold remains between 2,060 and 2,003. Let's move over to oil. Now, this was very interesting. It rallied hard coming into the session and then got crushed back down. So we already know there's going to be a ton of shorters here on oil. Oil's been pretty negative. It's gone bad for a while. It's obviously on the trend line, so this is a very important level. If oil is able to break through and go above this zone, I'd say it's squeezing towards the upside based on what we've seen with the options, based on everything else that's going through. So I think oil is well worth watching on the charts, and we'll be following it this week. Big level for it. Tesla, not so good. Bad looking day, bad looking candle. Generally speaking, what do we see? 210, possibly even 200. Really absolutely no buying structure here for it. It's just sellers and sellers and sellers. We already knew the previous accumulation zone was a big deal, which was 233, 232, and it just wasn't able to find the rallies that we were looking for. We already spoke about this zone. I liked it quite a lot, actually. And then it came down to this level and was unable to find any buyers. Now, if these trigger alerts had happened, we would have been on the bullish side, but of course didn't occur and it just fell through the bottom. Once that happened, it opens up 210. So at this stage, it could be that Tesla actually needs to sell even further to even get to the first level of buying pressure. What are your levels for Tesla? Let me know in the comments down below. Let's now move over to NVIDIA. So we talked a little bit negatively against semis because semis have some change of trends towards the downside, but NVIDIA has been very, very strong. Could it hit 600? The average expectation, according to the 12-month target of Wall Street's economists, is $660. So are they going to be able to get to 600? I mean, it's a classic style breakout pattern. The thing about NVIDIA is it often does fail with breakouts and then comes down and tricks people, but I would say at this stage, you have no reason to be really terrified of NVIDIA itself. It still looks like it's long. Like to see a new high put in the first couple of trade days. Then we move over to Goldman Sachs. So we mentioned there were a lot of trades here. Now, why is this an important level? Well, its previous supply, it's been shorted before a few times, and we can see here that we're setting up for either a great breakout up or a pretty pitiful kind of sell-off. And it did have that huge rally that came through here. So if the market's able to get underneath these levels of around 374, then we could be moving towards really breaking down to around 340. Now, that would give us that mean reversion pullback that a lot of people are looking for on markets. So remember, financials kick us off in earnings season, and the rallies have been significant. Let's just take a look at here at the rally of Goldman Sachs. So the rally of Goldman Sachs since the October lows was 34%. And it's the same thing through financials. So could this be a buy the rumor, sell the fact, the kind of storyline that we had with Bitcoin as well? Well, price action will tell us, and it's some interesting zones there coming up. Let's now move over to the German market. It's sideways, guys. Who knows? The trend is up, so you'd always go with the bullish side. But yeah, pretty messy market there. The Australian market, clearly the ASX is maybe possibly even accumulating here, but it's waiting. Until we get a breakout, we won't be on a momentum trade. So I could see people taking profit and targets at this level. So that's kind of key. US 2000 though, I want to talk about this one. So look, shooting star rejection, very nasty looking chart comes back up to grab the liquidity, which sits around here. So you can see the liquidity sitting right in that zone. We see a large transaction come in. The last time I was talking to the guy, the last time this happened, I believe it actually sold off when we saw a large transaction coming through with a very similar setup. Doesn't mean it's going to happen again. Of course, anything can happen in these markets, but we don't have the further sell through. But if we do, what happens if we get through these lows? What happens if we get through 1920? Well, the next logical zone for the market is to go mean reversion, 1860 kind of area. So between here and here could be quite a free flow of the markets down to that zone. And at this point, we'll be at the weekly 20 moving average. So of course, a key level, also demand, and that's going to lead into quite a few other markets starting to struggle. Let's now move over to the NASDAQ. You'll notice 2 long leg dojis just before. So last week we spoke about the idea that if in this zone we saw some type of weakness, that we would actually be triggering shorts. Yeah, if it happened, again, patience, react, don't predict. If it had happened, I would have had to go. I mean, that's how it is. Why not? It's a replicable concept, and that's what it's all about, creating replication in your strategy. Then we saw the market obviously go higher, and then it came down here in the NASDAQ, just making a low underneath this low, but not, of course, the main one over here, which we were looking for. Then it moved back up to here. This is an interesting zone. I could see sellers going for this on the NASDAQ and trying to protect themselves above this high. It's an interesting point. It's definitely the weakest market other than the Russell. It's weaker than the S&P overall. But yeah, it's a very interesting level. And of course, if we see ourselves finding back down to 16,600 and below, I could see that would be a catalyst for markets. Let's now move over to the US 500. So the US 500, we already know 4,700 is the biggest zone. But we also know 4,800 is the biggest zone on the bull side. We close above 4,800, we're probably starting to squeeze. It goes 4,800, 4,850, big important zone in general, but I would say 48 being the biggest one. I think it's like 48, 48.15 from the options side. And then 49.50 is going to be the next level actually based on current options of where the big triggers are. So we're at the high. Are we in some type of Wyckoff? We could be on a BC. We could be on a UT, therefore. This is a UTAD then. And then we see weakness that comes through here. If that happens, down to ideally 4,600, 45.68, and of course the previous demand block. So there's a lot going on here in the markets and a very pivotal point. And really, like anything, you need a good catalyst, and the catalyst is going to be earnings. And if you were playing the stats, you would say that, well, technically the market is weak on the stats because that's what usually happens this time of year. Now let's move to Bitcoin. Bitcoin sold, and we talked about the watch reaction here. Of course, we always had that target of 47 to 48K. Did it get higher? Yes, it went to 49. I understand. But it's sold off that level. Now, is it actually structurally super short? Yeah. So there are 2 scenarios. There's the day trader scenario where they're going to say absolutely it's short and markets are looking pretty weak. And they'll be looking for pullbacks to go short somewhere around that 46K mark. The longer term trader, though, is going to be looking at this and saying, well, it's not below 40K, so why do I care? And that's a fair assumption. If it gets underneath 40K and doesn't have an instant reaction, I would say that there's a good chance that we're moving well down. 36,000 or even 28 to 29 could be on the cards. And if you're getting a 28, 29 read with the Bitcoin ETF as it sits, the inflows, and of course, you might say that's impossible. I say anything's possible. But if you did get that and we were going into a halving cycle, what an interesting time indeed that would be for Bitcoin, and possibly a very important period for it, which could be pretty sweet. So we'll be watching this one quite a lot. At this stage, though, nothing to get too excited about. Still within and above the 40,000. So I could kind of see like a bit of a relief rally, and then, will 46K bring the bears? That's going to be the next area I could see them sitting at. Ethereum is also one to watch. Of course, this actually weakened off a little bit. Oftentimes you see movement from Bitcoin into Ethereum, and then it rotates and it outperforms. It's due it, but will it do it? I don't know. Price action wise, if I was just looking at this, I would say it's not looking too good because, of course, rallies. Well, actually, this would be a pretty good short zone where it was 2,600 if you're looking at day trading. But I'm going to say that Ethereum, generally speaking, I would usually say it should outperform Bitcoin, so it should perform better. And that's usually the kind of line that you would take. Price action wise, though, you're looking at that 26 to 26.50 being a struggle zone, as it is the most traded first level. If we breach through the high, I would say just under 3K is the target. Let's now move over to the major news this week. So as we